My name is Lucy Young, and I'm here with my partner.
My name is Yuko.
We are honored to present our stock pitch on Intercontinental Exchange, or ICE. As financial market evolve, ICE has proven itself a resilient and innovative leader. This presentation will walk you through our in-depth analysis and valuation, concluding with our buy recommendation and a target price of 186 per share.
So Intercontinental Exchange is a globally known financial services corporation founded in 2000 by Jeffrey Spencer. Who developed it from an energy trading startup into a multinational company innovating at the intersection of finance and technology. In fact, he remains the chair and CEO today. Despite being a global leader in fintech innovation with a market capitalization of over $100 billion, operating in the most diverse ways possible, took on strategic acquisitions, what we will explain later, and much more. Next are investment thesis. For more than 20 years of creating leading company, International Continental Exchange has been delivering consistent compound annual growth rates to its shareholders of over 17% over the span of 2006 to today. It operates exchanges, clearinghouses, fixed income and data services, mortgage technology, a pioneer of digital networks, providing ESG solutions and venturing into new sustainable markets. We present International Continental Exchange as a strong buy with a target price of $186 based on diversified revenue model, strong competitive edge, and growth in high margin segments with strong financial performance. So this highlights Intercontinental Exchange timeline with its founding in 2000, acquisition of the New York Board of Trade in 2005, leading to its ownership of the New York Stock Exchange, the largest stock exchange in the world. Its launch of ICE Data Services and acquisition of Interactive Data Corporations, launch of back into the cryptocurrency sectors, and much more. You can see.
Okay. So regarding the consistent track record of growth, the slide highlights ICE's consistent track record, moving an impressive 15% compound annual growth rate and adjusted EPS from 2006 to 2024. You can also see the steady upward trend year over year, starting at just 0.48 in 2006 and reaching an estimate of 6.07 in 2024. That's more than 12 times increase over 18 years, which demonstrates the strong operational performance and disciplined capital allocation for ICE. On the left, we'll call out the 2024 highlights. Net revenues are up 16% year over year in constant currency. Pro forma net revenues increased 6%. Adjusted operating income rose 15% with a 10% gain on a pro forma basis, and adjusted EPS climbed 8% year over year, setting another record. So, regarding these two graphs, ICE, a leading global provider of technology and data, today announced that a record of 2 billion futures and options traded on ICE in 2024, marking the highest volume year in ICE's history, including a record 1.2 billion commodity contracts and a record of 753 million interest rate derivatives contracts. ICE is also home to the largest and most liquid energy derivatives market in the world. 2024 marked the largest volume year for the number of oil contracts traded on ICE with a record of 755 million oil futures and options contracts traded, including a record of 346 million Brent futures and options, a record of 92.8 million gasoil futures and options contracts, 21 million ICE in Dubai Platts future and options contracts, and 6 million ICE Merbank future contracts. So this slide highlights ICE's expansive global energy network and strong revenue trajectory. On the map, we see ICE's benchmark products covering key regions, including Brent Crude in Europe, WTI in North America, JKM in Asia, and emerging carbon and environmental markets in the US, EU, and UK. ICE supports trading across crude oil, refined products, LNG, and natural gas, making it a central hub for global energy flows. On the right, the chart shows ICE's energy revenue growing from $992 million in 2019 to $1,876 billion in 2024, a 14% compound annual growth rate. This growth is driven by rising demand for risk management tools and price discovery in a volatile and transitionary energy market. ICE's global infrastructure positions it to capture ongoing growth in both traditional and green energy markets. So regarding revenue drivers, the slide outlines ICE's key revenue sources, which are both diverse and strategically aligned for long-term growth. Trading and clearing fees form a foundational stream driven by derivatives, equities, and fixed income products across global markets. ICE also earns recurring high-margin revenue from data services, offering like pricing and analytics tools used by financial institutions worldwide. Connectivity and tech services generate revenue as well through co-location and infrastructure access, while environmental markets are expanding fast, which thanks to growing interest in carbon trading and ESG products. And this slide represents the trading activity across ICE's core financial products from 2019 to 2024, measured by average daily volume ADV and rate per contract RPC. And in the bottom left, we can see the interest rates. ADV surged after 2021, coinciding with global rate hikes. RPC peaked in 2022 and has since declined slightly, likely due to a tighter spreads in more active markets. And my partner Yuko will explain the stock performance.
So as of April 2nd, 2025, the Intercontinental Exchange closed at around $170, 0.761% down from the previous range. It has reached an all-time high on March 27th with $176.36, with prospective earning growth in 2024 reporting a 16% increase of revenue to $9.28 billion compared to $2.75 billion the previous years. It has analyst ratings with a strong buy from over 16 analysts with a strong 12-month price target of over $182, suggesting around 7 to 8% upside.
Okay, so regarding competitive position, this slide compares ICE to its main competitors, including CME Group, Nasdaq, LSEG, CBOE, and so on. ICE stands out by owning the NYSE, leading the energy derivatives market and offering a fast-growing mortgage technology and data platform. And my partner will elaborate more on the SWOT analysis.
So although Intercontinental Exchange do carry many risks, threats, and weaknesses because it depends on market behavior and the fluctuation of interest rates, inflation, etc., over which it has no control, and also technological disruptions, cyber attacks, etc. It has many strengths, being the market leader with ownership of the New York Stock Exchange, as mentioned previously, extremely diversified portfolio, and strong financial growth and stable dividends. It has many opportunities with the growth of increased AI demand, which will be explained later, which uncovers lots of new market expansion opportunities, further technological innovations. With this strategic acquisitions venturing into mortgage technology and further expanding its operations, it sees many opportunities and puts for growth.
So for financials, the slide provides a snapshot of ICE's strong financial performance and outlook. Looking ahead, EPS is projected to rise from around 6.66 in 2025 to around $7.44 in 2026, continuing a upward trend. ICE maintains a healthy operating margin of around 55%, which a net margin nearly 30% and return on equity of 14.8%, indicating a very strong profitability. And for forecast and valuation, the slide highlights IC's expected earning growth and valuation analysis. And on the right, we see the assumption behind our DCF model, a 7.1% WACC, 3.5% long-term growth rate, and a projection through 2029 using the perpetuity growth method. Using 2024 net debt of around 19.5 billion and 575 million shares outstanding, our DCF yields an intrinsic value of around 186.04 per share. Additionally, consensus Summa 11 analysis rates ICE as a strong buy with a 12-month average price target of 183.73, with revenue projected to grow at 5.2% annually. This valuation reflects confidence in ICE's long-term earning power.
And going to ESG, the Intercontinental Exchange is also a strong top leader in ESG, rating 18.9 with a low risk and also a score of AA from MSCI. It is a leader in the transition to reimagine renewable energy sources as it ventures into investing global markets for environment, especially. They have facilitated the development of robust secondary market in emissions trading and renewable energy, which are critical parts of its efforts to meet emission reduction targets. They have worked with oversight from its board and sustainability governance committee and report sustainability insights on an annual basis with reports on its website. And then as for social and governance, it engages in lots of philanthropy efforts by matching employees and charitable contributions to over 5K annually. And most notably, it funds many financial education programs worldwide, from India Financial Literacy Program to the YIS Future Fund in Atlanta's underserved neighborhoods. For governance, it prioritizes strong governance board oversight with the nominating and corporate governance committee, accessing the company's ESG initiatives and guiding the company to further expand its sustainability goals. And although it does a very good job of diversity in its board of directors, it still has room for improvement with only 27% of females in its global officer positions. And then as for artificial intelligence, as mentioned earlier, it shows many areas of growth, and the fact that the increase in AI demand also contributes to ICE's global revenue growth. On the left, we see AICOE, which is its center of AI Center of Excellence, and this is like governance guardrails to reduce the risks inherent to AI. It can be seen as like an additional governance board, especially on the topic of AI and ensuring that established guidelines are followed. AI opens ICE's doors to further revenue growth and opportunities among many sectors, including ICE Chat, ICE Cloud, mortgage technology, and risk management. It invests in mortgage data and document automation through the extension of AI-powered tool, which improves climate risk modeling, and it helps investors better evaluate their financial risks. They also are used to streamline the home ownership process and reduces the friction in lending and reducing the costs to service loans. For ICE Chat, it invests in this commodity chat platform to improve actionable insights for its traders and to give real-time data collected through many websites, where it also offers valuable financial advice. For risk management, it is implementing a model for pattern recognition to detect regulatory compliance activities, which protects traders from unfair market practices. And then some of the lesser or known impacts of AI fueling ICE's growth are ICE Cloud and in the renewable energy sector. So the ICE cloud is kind of like an IT infrastructure already, but AI will be penetrating it even further with the fact that it will be providing customers the opportunity to insert their own data into AI model. And this already received customer deposits for 2025 and 2026 year network build-outs, indicating that customer interest in AI modeling forecasting, it goes into a multi-year tailwind to revenue growth. And in renewable energy markets, because of growing demand for AI, and since AI models require a large amount of energy, power companies and third-party data centers are looking for ways to offset their carbon footprint where they turn to ICE. And with corporate involvement doubling over 250 firms in 6 months, ICE expects strong revenue growth in these markets driven by AI model demand.
So regarding Catalyst closing, there are a few stages, including foundation, which established a strong exchange, diversification, expand into future, data service boom, which build high margin recurring revenue from market and reference data, mortgage tech expansion, and also AI and ESG innovation. And there's also Catalyst highlights, which we highlight the mortgage tech synergies. And YIS Texas launch, rising interest rate volatility, data business growth, and also global exchange network. And for the appendix, this is the summary for our balance sheets that we refer to and we use the data of. This is our DCF calculation on a spreadsheet. And thank you so much for listening.